Hey guys, it came to my attention that some of you have never listened to an earnings call and don't know what to expect. So let's listen to it and I'll give you some of my live reaction on what I think about what's going on in a call because a lot of people have never listened to a call and don't know what they're doing when they hear it. So first things first, go to Google, search for a SOFI earnings call, click on the event and presentations. Since it's already happened, scroll down and click on webcast. Once you do that, it's going to take you to a new page. Skip the registration, create the account, and just go right to continue without a account. It's going to ask for your information and just put individual, and then it's going to take you to the call. So I'm going to speed this up a little bit, but let's check it out together. I'm going to pause right there. They said it's going to be in the 10Q statement. You might want to Google that and know what a 10Q statement is. I don't know why it's kind of stopping like that. Let me put it back at regular speed. That's really big. So if you miss those key points on about what they're going to go over, that crypto space, adding in those new members, this is very big for revenue and being able to service products to individuals inside of them. So they're making their own ecosystem. So once they get you in with checking and banking, now they know you'll be a good candidate, or to see if you're a good candidate for mortgages, student loan refi, savings accounts, stock options. This is really big. Did y'all hear that about that revenue? Let's go back. Oh, I didn't want to start it all the way over there. Well, I did want to touch on that again, that fiat crypto banking, but let's get back to those revenue but earned. See all of that revenue, referral fees, interchange revenue, and brokerage fee revenue. So they do, like, again, the stock options, with options trading has been over there, they're creating more revenue. They're opening up several key aspects, not just being a savings account or checking account. They have multiple assets or different branches of this business outside of just being fintech. So that's what has me so bullish on them, because there's so many features and offers that they're presenting. So take a look at that. Write down those. Do you hear that? They beat every time since going public. 17 straight quarters. Like, what more do you need to find? Like, if you were looking like for the best NBA player or the best NFL, or the when you were scouting, or when they're doing recruitment, this is the type of company I want on my team. I need them on my roster. I need them on my bench. I am drafting SOFI. SOFI is in my top right now. And again, this earning call starting strong, already seeing the things that I want to hear. They're still going to touch on the things that where they're lacking. We want to know that too, because everybody can build themselves up, but you want to know how they improve on the things that they're lacking in. So we'll wait to hear some of those things. That's really good. So now we're going to see how they're going to bring more people. They're not just saying we anticipate the growth of SoFi and the app to be expected 1.2 million. No, they're telling you how they're going to drive members to the platform. We're going to see how they're going to do that and see that it makes sense for us. So break the earnings call down into pieces, pause it, listen to it, and make sure it's digestible. Don't just sit up here, cut it on, go wash dishes, or you could take a jog, but something that's not going to distract you, where you can still pay attention to it, but you don't have to just be divulged, because you want to be able to stop and take notes and to research the things that don't really make sense to you. So recruiting NFL, what are we getting into? Football season. So SoFi Stadium, you got SoFi players, you got NFL players promoting this. This is going to be big because people, whether they like SoFi or not, they like that player and they're going to want to be tied to that player. They're going to want to say, hey, I bank with who my favorite player banks with, or I do business with this company that my player does business with. If that player also makes appearances, that's also going to drive people into wanting to use this product. That's a big deal. First payment product with blockchain. So this is another idea. Again, they're in fintech, but they're also using the lightning speed of using crypto. So that's very innovative. A lot of people want to be dinosaurs and be stagnant. But remember what happened with Blockbuster when they didn't want to change with the time. They got left behind. Netflix came about, and then, well, before Netflix, you got Redbox with the DVDs, and then DVDs got left behind by the streaming services. So you want companies in your portfolio that are continuing changing and keeping up with the time. SoFi Pay. So you're gonna hear Bitcoin. You're gonna hear. And we look at the timeline of this. So we've gone from MoneyGram, Western Union to Cash App. So now we can do international at faster speeds at cheaper cost with SoFi Pay. Okay. A lot of people want to be decentralized, and some people just want to have their information in a place where they feel like it's safe. So them being able to offer tokens in one centralized location is going to draw in people who are not just ready to get into the DeFi space and be off the base. Now, I will always say, own your keys, own your token, but this is going to drive those people who are not yet comfortable and have everything in one set place for them to do all of their banking, crypto purchasing, and coin revenue spend deals here. So the footprint of what they're drawing up is just so phenomenal. Playing stablecoin SoFi USD. Okay, so I already banked with you. I got my mortgage with you. I refinanced my student loan with you. I trade options with you. Now you're gonna bring a stable coin so I can transfer fiat or leverage my account with moving currency with a stable coin. Man, if this doesn't get you excited, I don't know what will. If you don't understand stable coins and the blockchain and where we're going as far as digital currency, please take some time to do some research on that. This is another thing that I love about SoFi. Instead of them being predatory, like most companies that have buy now, pay later, they're looking for people to default on. SoFi is trying to educate and keep their clients and their new prospects from defaulting, letting because they know the current economic state. So if they can help the people do better and be better and save their money, it's going to do better for their business. So they're investing in the clients that they're bringing, in the customers that they're bringing on, and that's a huge chance that they're taking. But with the right clientele and in this investment, with having a stable coin, having a SoFi coach, this is top tier. I don't know a lot of other businesses or bank that are providing this skill set. They usually just say, "Hey, pay all your bills on time, you'll be okay." But SoFi is trying to help people get ahead by charging less or spending less, so they can have more in the long run. That is top tier. See that? I've been pushing and I've been in the stock market since about 2020. This company is coming on and see this is something that their customers want. So they're going to bring it. So if you know a business or a bank is providing a skill, why wouldn't you take advantage of knowing that skill? So not only do they want you to bring your 9 to 5 money in, they say, hey, if you leave that 9 to 5 or you lose that 9 to 5, we still have options and we still have products and services for you with that level 1 option. I believe it's different than their level 2 where we say, you're using cash and you're not on a margin account in cash, but I'm going to go back into it. But they already had level 2. They switched down to a level where they expanded to a level 1. But again, these are great access to have all in one place. You can invest, you can trade crypto, you can trade options, all in one platform than having to hop around. Oh, I do my banking at such and such Bank of America, Chase. I got my options in Fidelity, and then I'm doing this. You can do it all in one platform. That is huge for expansion. boom, they're hitting people who can pay back. They're loaning to people who can pay back. So they're not getting subprime members. These people are almost, again, one you need to know the credit score can go from 0 to, I believe, 800, 850. And they're getting members that are well over in the 700 club. Usually you only hear people saying, oh, I just want to hit the 700 club. They're getting people that are they're in their mid 700, so their payback or default, they're going to be high in their repay on those loans and very low on their default not to pay those back. So they're getting prime customers where they're going to be able to get that revenue back from lower interest rate. They don't even have to charge high interest rate because these clients are going to potentially pay back a lot sooner. So they're still going to reap that benefit of loaning them that capital. 945 million in origination from home lending. So again, they're about the American dream, making sure people get into homes. They're not doing high interest rates. They're making sure they're going to be comparable to the market so people will want to use them. Now, I haven't heard or read the reviews of how the process has been for people who've taken out mortgages with them, but I may reach out to some of the brokers that I know and see if they've done some SOFI lending. How does that play out? Is it hard to get members in? Are they biased or selective, just based off income or on racial? Like I said, when it comes back to those student loans and the FICO scores, when people have a good FICO score, they do similar have a certain income bracket. So they're hitting those targeted communities or sets of people who have a high probability of paying back loans to cater toward. So it's not like if I know you've borrowed money from this, and this person, you didn't pay them back, you got a high probability of not paying me back. They see the track record, they see that the people have the ability, they're just leveraging their credit and doing it at a cheaper rate. So more and more people will come to them because if I can go get a loan from you at 6% versus 15, I'm going to definitely go tell two or three more people, hey, go get your loans from over here because they're about half the price. And I have a higher probability of paying it back so that they don't mind cutting the interest rates for those loans down. That's very key on how they're strategizing who they cater to and who they supply their services to. See that? This is what I was referring to even before they hit it. The decline rate of charge off, meaning people who didn't pay back. So that went from 2.83% to 2.6. So them knowing their clientele, they're reaching people who have a higher probability of not defaulting, not paying back. And it takes some time once you get into the credit game to know you have to miss quite a few payments for them to want to close down and charge off your account. But that charge off will stay on your account for about 7 years. It doesn't go away. You still owe the debt. It's just written off by the company or by that bank. Um, but that's another case. But that's a great thing to be able to drop that. Seeing people, they're catering toward a select community that will pay back, which will increase revenue. So again, they understand as a business, just like if it's a trader, you have to set a stop loss and take profit. They have losses. They know they're going to be losses in here. So that's why I made that post about, you think your favorite guru or mentor never takes a loss. No, we have to mitigate those risks. And them as a big corporation that makes billions and billions of dollars still understand there may be losses, but they're within the range of what they can absorb. So you never want to be taking more risk than you can absorb. You want to set some limits, and that's why the set it and forget it, create a stop loss and a take profit is much, much easier than you just going, oh, I'll wait for it to get here and I'll close it out. Because 9 times out of 10, you're not. They have a set amount of debt or losses that they can take on and still be profitable as a company. Now, the raising of the new capital, if they're talking about that offering, it did bring the share price down slightly. I think share price dropped like $2 to $5, but it still recovered from that. So initially, investors did not like that, but they still continue to buy in. Growing $1.9 billion sequentially. Like, most people can't grow $2 over a year. They end up negative. This is great, to show them growth as a company. If they can keep this up year over year, again, I just see them working wonders. We'll probably go over PayPal as well. They had very great earnings. Probably could have traded around in as well, but we'll talk about that next. See, they're tapping into a market of people who not trying to refinance loans. These are people who are taking out loans to advance their education or increase their position in the job market. So they're going to pay back the loans. This is not looking for them to default or disservice those loans. They need the loan money to further whatever goal they have in the future. So they're making sure and looking at the longevity of, okay, interest rates start dropping. It makes it easier on the banks to give out loans and supply credit. When interest rates are high, they're more tight-lipped to hold the person, not going to give out loans like that. So excuse me, I think that's a very smart aspect that they're relying on, and not just focusing on who can service the debt, but also what's going on in the microeconomics and as far as the stability and capital. Do people have the money to be able to pay it back if they are able to loan that money to them, and seeing where that growth space is, and then being able to loan at a lower rate? Again, whoever has the best rate are going to be able to benefit from this. It's not like everybody's just going to go out of business and say, hey, there's no credit, no more credit cards, no more loans that we're going to present. It's going to be who has the best services for the particular loan product that you want. All right, I'm not gonna go through all the questions because I may or may not try to listen to them. I'll watch the rest of it, but I just wanted you guys to listen to our earnings call, kind of break down what it is. I did have it sped up. It's just the way I listen to them because they get very excited because they're kind of talking a monotone way, and it could be slow to listen to, take a little bit longer than I would like to just digest the information, especially if you're going through multiple earnings calls, and they're going to be multiple throughout this week. I do plan to go back. As I mentioned before, PayPal had big earnings and they jumped up quite a bit. Going to see if they're going to hold, but eyes on PayPal, UPS at the end of the day. Well, market is now closed. We're going to have Visa, Cheesecake Factory, in phase. My eye will be on for Wednesday for Verizon, Boeing, CVS, Caterpillar, Etsy, ADP, Heinz, Sprout, Starbucks. I forgot about Starbucks. Excuse me. Carvana, ServiceNow, Chipotle, Apple. These are going to be heavy hitters at the end of the day. If they beat, now I'm just going to go like Meta beat, Microsoft beat, Apple beat, Alphabet beat for Google. Let's say all three beat. The market is going to be super bullish tomorrow. Let's say half of them beat. Let's say one or two beat, market's going to be super bullish. If they just open flat, we could trade sideways leading into Thursday. But this is a very, 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 very bullish week with these earnings if they're performing well, if everybody stays on par. You got Lilly, like I said, Lilly, Merck, Ambi. I'll be looking for them as where they're going as far as the weight loss medications. Roblox, I always tell parents get into the Roblox. If you're buying Robux, buy Roblox, at least some partial shares. I'll be interested in AutoZone, Advanced Auto Parts, and Roku. Pretty much every TV in my house has Roku on it, so heavily invested in them. The trading doesn't look that great as far as trading, but I'll definitely take a look. Ride in the crypto space, back into one of SOFI's key avenues for revenue, which is the mortgage industry. Be looking at Rocket. I've heard reviews that people don't like the mortgage industry when it comes to servicing through Rocket. They have a lot of difficulties, so we're going to see how they're managing that. Are people sticking with them? Reddit, I used to wonder how Reddit was making their money, but it's about the data and people that are on the database, and they can sell that information, and that's a big thing, having those lists in database of people. Coinbase is going to be big. Also, their ETF Coney. And then we have Apple and Amazon. I don't see Apple doing anything major, so they might be flat or slightly up. And Amazon, again, Amazon sells everything, so I expect them to be bullish. With that AWS situation, how they're planning to manage different outages, I'll be interested to see how that works. And then, like I said, I saw before that the AWS brings in about 17 to 18% of total revenue, but like 50% of one of the other revenue streams. So that's quite a bit, a lot. And most of the time we only think about the resale side of us buying and ordering things, but that is going to ramp up over the next 2 months. We're going to be entering into the Santa Claus season and the holiday, so people are going to be buying, people are going to be purchasing things to make sure there's a great holiday, especially if we're getting lower interest rates. People are going to be taking out loans left and right just to be able to make sure the holidays are a success. So keep that in mind. Keep a lookout on SoFi. Again, if you haven't started investing, you can start now. There's dollar cost average when you can. My goal and target on SoFi is 40 by the end of the year, if not higher. We'll see how the rest of this week goes. Again, if we're going to be bullish for the rest of the year, that's gonna kind of trickle down into SoFi and a lot of more of the financial products such as PayPal. Once Klarna gets on board, you're going to have PayPal, Affirm, Bank of America, all of these third parties where you can get loans, where you can service debt, do mortgages, student loans. All of that's going to be a big deal. So hope this was fun for you to listen to. I gave a little bit of commentary. I'm going to try to do some more of these. I'm not going to do them all because I just have a passion for SoFi, but any of the other companies that I have a passion for, I'll break it down. If you have one that you want to check out, if you want me to go over Meta after hours or Microsoft, drop it in the comments if this was helpful. I'll be streaming this over. This may stay up for a little while. Might take it on over to YouTube, but I appreciate y'all tapping in, and y'all have a good day.